So just before this video starts, I just want to let you know that the microphone didn't work, so apologise for the bad audio that you're about to hear in a few seconds time. Apologies for that, but here we go anyway, and hopefully it works on the next video. So today we're going to talk about the battle that's going on in the background at the moment in the stock market. There is a big battle between the bears and the bulls, and in what direction is the market to go to next. And we're going to take a look at that today and top that off with some earnings. Obviously we had the earnings that came out last night, some mega earnings, and we'll also cover them today. So in case you haven't noticed, there's a big battle going on. There's a big battle between the bulls and bears on the direction of the market. We have the bears at the moment that are saying we've gone up too much in the stock market. We're going to have a terrible 2023 still. There's going to be a recession that hits, as you can see here, that's on a CNBC here saying a recession is coming and the stocks are going to go down. They're going to get hit by it. And at the moment, you've got all the bulls that are saying that we are doing okay in the stock market. We're up this year. 2022 was a bad year, but 2023, we're up in a positive direction. The earnings are holding up. The inflation has peaked. Interest rates will start coming down at the back end of the year. We're going to have a stock market that goes up. And that's the story that's going on at the moment between the bears and the bulls, and there's battling away at the moment. And yesterday, at the moment, we've had a good year. 2023 has been a good year in the stock market. 2022 is a different story. 2022 was an ugly year in the stock market, and it was one of the worst years that we've had as investors. But 2023 has started off okay. We're only 4 months into the year, and we're currently up nearly 7% in the S&P 500. That's a pretty good year when you consider the average return on the S&P 500 is 8-9% a year. We've nearly got the average return in the S&P 500 already, so we're on track for a pretty good year. And this is where we've got the little point now where we're struggling for the direction on where to go next. We've kind of got to the peak where we got to August, and then we kind of gave it all away going, yeah, we're not ready to go up on that rally yet. We're not ready to kind of move back to, all-time highs on the S&P 500. And that's where it broke down in that October timeframe. And we're kind of stuck at this range now where is it worth the market going higher, or do we stay here at the moment? And that's what's kind of battling away in the background. Now, for me personally, I'm always bullish on the stock market. I always think it pays to be bullish on the stock market, because when you look at the stock market in the long term, earnings historically, whatever environment we go through will recover and they will go higher. So for me, even though there might be some impact on earnings, it pays to be bullish, because every bad situation we go through, the stock market recovers at 100% of the time. And the other thing is, why would you want to be bearish? The thing with bearish is like, what's the maximum you can make on being bearish? The maximum you can make is down to 100%, and that would be a company going bankrupt, which is obviously a very rare situation. It happens, but it's a rare situation. On being bullish, what is your potential upside? Being bullish, your upside is over 100%, 200%, 300%. So I never understand why you'd want to be on the bear side compared to the bull side, because bulls recover all the dips 100% of the time, and the limitations that you have on being a bull is very limited. There's not really a ceiling. You can keep going up and up and up. So I'm always permanently bullish on the market, but what we have at the moment is the bears trying to drag the market down. And this was as soon as we had a dip yesterday, as soon as we had a dip on Tuesday, the market dragged down. And this is when everyone started talking about, well, it's still going to be a tough year. We're being a bit carried away. And the bears are trying to keep the market down at the moment. And the bulls are saying, we're ready to go. Earnings are doing okay. We're ready to now move on. There's not going to be a recession. We're going to do all right here. And it's funny enough, because I was watching CNBC, and Peter Lynch came on CNBC. And obviously you guys know he's one of, if not my favorite investor that I like to look at. And Peter Lynch basically said this would be a unique situation, because if we do hit a recession, this will actually be the first recession that we have that everybody's expecting a recession. Like, everyone says we're going to have a recession this year. And the thing is that you normally get a recession when you don't expect to have the recession. And this is personally been my thoughts as well, is that if we were going to have a recession, we would have actually had the recession in 2022. Like, when prices were going really high, inflation was going sky high, that's when we would have had the recession in the likes of Q3 into Q4. And that's not happening. And I don't think we'll have a recession if everybody's expecting a recession at the moment. And at the moment, you look at kind of what's going on out there in the economy. At the moment, with all these pressures going on, the earnings are actually holding up okay. You can see here there's been a decline in earnings in Q3 and Q4 and into Q1. And you can see here, this is when we should have had the recession. But yet, we are looking like we won't have that. And then we should actually see, at the moment, the forecast is for the earnings to rebound in Q2, Q3, Q4. So at the moment, we are seeing earnings decline, but then expecting to have the recovery. So we can't have a stock market that's down and a recession if this is starting to happen. And the big thing is, when you look at the moment, what's going, when you look at earnings season for the last week, earnings are actually ahead of expectations. And all these things, you're looking at what the bears, we had this little big one day of redness, and the bears are trying to keep the market down. But the problem is you look at earnings are even ahead of what's expected at the moment. And it's one of those that when you have a bull market, sometimes people get, like in 2021, when we have a bull market, we have euphoria. We have bulls that get way too excited. And sometimes when we have bear markets, sometimes the bears get too excited. The bears hang on for too long. The bears are thinking, we need to just drag this down a little bit lower now, when it's like, actually the time was to pivot. The time to pivot was a few months ago, when we were at, really low valuations in October time. That was the time to pivot, because that was actually the worst of the whole situation. And it was clear last night, we're ahead of earnings at the moment. If we should have had a recession, it probably should have happened by now. And you're looking at the earnings last night, and once again, we're ahead of expectations, and the earnings last night just added to the feeling that we're all right here at the moment. We were looking at Microsoft earnings, and I've owned Microsoft now. I've owned Microsoft for something like 6 years. I've been a shareholder in Microsoft, and it's I first started buying this stock. I'll have to go zoom a bit further out on the chart. I actually started first buying Microsoft at $80. I cannot believe I was buying Microsoft at $80, and it was one of those stocks that you were looking at, and the market was valuing crazy low. It was like 18 times earnings for such a company that was absolutely smashing it. And I ended up buying Microsoft, and I think my average sits around $109 now, which is still really good. When you look at $109 average, I'm up a fair amount since that time frame. And I've sold some Microsofts, but I've never been able to sell it all. I know a few people say, well, at 33 times earnings, it's a little bit of a rich company, and I think that it's a rich company at these top valuations, but does it deserve, is this a premium company? Does it deserve a premium price? And you can't knock it. You looked at Microsoft earnings last night, and they were fabulous. And that once again puts to the point, we talked about earnings, you talk about, we're going to have this recession, we're going to have this crash. And you look at companies like Microsoft earnings last night, and you think, it can't happen. If these companies are still doing these earnings, we're doing all right. And Microsoft earnings were really good again last night. And just back to the point I was making, though, that I always thought, is it if I'm not buying at these levels, should I sell at these levels? And I think ultimately Microsoft probably will always deserve to trade at a premium, as long as it's bringing these numbers out. And I was looking at Microsoft again last night, and obviously today it's up a really good amount today. It's up 8% today off the earnings, and then it was backed by the UK blocking the Microsoft takeover of Activision, which shareholders don't really like, and investors don't historically like, big acquisitions, because it's very rare that a big acquisition actually works out for a business. So that's why people are actually getting excited by that. Originally Microsoft shareholders didn't want the Activision deal to go through, and that's why they're getting excited, because of the fact that they historically big acquisitions don't normally work out. But there's a combination of that and earnings, and the stock's up. And I was thinking at Microsoft, and thinking, I can't sell this company just because I won't buy at these levels. I won't sell at these levels ever either, because as long as they're smashing it how they are doing, the stock's just going to keep going up and up and up and up. And so there was that point as well that I wanted to make, but also the point that earnings are still strong. You're looking at earnings last night. I mean, Google should probably be up more today. It had a little bit of a relief rally. I would like Google to potentially cut a few more jobs, but you look at the earnings last night, and you're thinking, to say that there's this fear of companies pulling back the spend at the moment, advertising spend being pulled back, the earnings were still very good from Google. And you think, well, when we get into an environment where advertising comes back, this is going to, absolutely smash it. And I was looking at people last night talking about Google, and they were saying oh, Google's a dead company. And I think they announced a 70 billion buyback of shares. And it's this is what happens when you have a brilliant company. A company that generates all the profit that it does and has an amazing balance sheet. You can afford, that's why you want a company with a strong balance sheet. A strong balance sheet that can just throw out a 70 billion buyback like that. And I couldn't believe I was seeing people the other night, talking negatively about Google. They were talking negatively about Google because it was down, 30% for the year. And I was talking about this with Car Factory yesterday. I was saying, the amount of time that you see people talking negatively about a stock because it's down. Google's down 30%, and people are talking negatively about it because it's a dead company. you got to realize this sort of company here, when you look at the cloud, it was amazing earnings, and when you look at the advertising spend, that will come back once we move out of this bit of a negative environment, and we should get that by the end of the year. And it was just so crazy to see people that were pricing or saying that Google's a bad stock because the share price is down. Oh, it's a dead company, look, they're not innovating. They don't need to innovate that much. When you've got a platform like YouTube, when you've got Google and the market share you have, you don't need to innovate that much. You just need to keep your market share up and generate the amounts of profit you are doing. You throw off 70 billion buybacks with that balance sheet you have, you're going to do absolutely amazing. And also, like Visa reported earnings. I think this stock should be up more. And same again, you talk about premium. It's a richly valued company, but when you look at the numbers that Visa threw off last night, you're like, it's going to trade at a premium. It's going to trade at a premium because of how good these earnings are. And it's like, do you sell it? And I think there's no point selling it either, because realistically, it's probably always going to trade at a premium as long as it's smashing the numbers how it is doing. And looking at Visa's earnings last night, you're looking at the most up-to-date data out there, and it was clear that the global environment out there is still pretty strong. When you look at Visa's earnings, at the moment, there's not that much of a recession in Visa's earnings, and that's very up-to-date information. And you're looking at, like, going back to the start of the point of the video, which is this battle between bulls and bears. At the moment, you've got the battle between the bulls and bears, and the bears are saying it's going to go lower because we're going to hit a recession, but yet there's no signs of the recession creeping in. And we should really be in the recession now. We should be in the recessionary environment now, because, if we get to, December time, earnings are going to recover. The Fed are probably going to be halting interest rates or even bringing it down. Inflation is going to be definitely going to have peaked by that time frame. So we need to be hitting the recession now. So all the bears that are out there saying this is the recession, we should be seeing signs of it now. There is weakness there, don't get me wrong. It's reflected. It's reflected in the S&P. The S&P went down, over 20%, 22%. It was reflected in the S&P that we have hit weak earnings. The problem is that, are we going to go lower at the moment? And you look at the information that's out there, and it's like, no. And then you look at the bulls case, and you're thinking, well, the bulls are saying that inflation's peaked, interest rates are going to, obviously start coming down, earnings are going to start recovering by the end of the year. And you're looking at the moment, and you're thinking, that's most likely the scenario. But you're seeing the battle at the moment where it's still a 50-50 split. There's not enough bulls in the camp at the moment to kind of lift that to new highs, and that's ultimately where we're at the moment. And the last one is Enphase. Enphase reported earnings, stock was down 23%. You probably heard me the other day that I was saying that this is on my watch list to see how they do with earnings and see what's going on there. And obviously the stock's dropped 23%. So could this potentially be a buying opportunity in Enphase? Well, I'll tell you, I'm going to do an earnings review on Patreon, and you guys that are on the Patreon and watch the earnings review, I'll talk about if this is now a buying opportunity in Enphase, or if there's a reason for that drop, and if it deserved to have a drop, and if actually it's probably one to avoid at the moment. So I'll cover that one as well on Patreon for you guys. And also, speaking of Patreon, I am in about an hour's time, I'm going to drop a live Q&A session for you guys, so you guys on the Patreon keep an eye out, because I will be doing that very soon. Anyway, hope you enjoyed this video talking about the kind of battle that's going on there with bulls and bears at the moment, and a couple of bits of earnings from last night, and just general information about the stocks that are making the moves at the moment today. Anyway, so hope you enjoyed it, and as always, smash the like button, and I'll catch you in a bit.